We got data about 10 minutes ago that UK prices surged to a 40-year high, 9.4% in June, slightly above expectations, the most since 1982. Joining us now is Bilal, Hafeez, CEO and head of research at Macro Hive. Bilal, just when you think that inflation numbers can't get worse, they continually do. Looking at the broader picture, I mean, the stressors that have caused equity markets to fall, that have caused the dollar to strengthen, they are certainly still there. But that's not what we're seeing in markets at this moment. How do you interpret the moves where we get these really strong risk on days like yesterday? How much do you read into them?
I think to some extent, it tells us that markets won't move down in a straight line. I think it also tells us that at least equity investors are becoming a bit less negative than before. So we will see moves like we saw yesterday. However, if we think about what the main driver of equity weakness has been over the past 6-7 months, which has been tighter central bank policy, i.e. higher interest rates, then that tells us that there still is this looming risk for equity markets going forward, which is that central banks are likely to hike a lot more than people expect. And in general, if you look at interest rates and what the market's pricing, say for the Fed or the Bank of England or any other central bank, the pricing has essentially gone sideways over the past month or two. So markets have started to take back some of the rate hikes they had before. The market's starting to price rate cuts for next year. So it seems like the market isn't as willing to push for this view that rates will be much higher. And I think as a result,
Bilal, hold tight. Your video is acting up a little bit at this moment, but we can still hear you. So do not concern yourself. Mark, go ahead, jump in here.
Yeah, Bilal, I wanted to ask you there. I know that, just recently you've advocated kind of putting on some pair trades, which makes sense, the idea that central banks probably still have some more hiking to do, and of course, some negative EM trades. And I was particularly interested that you're advocating long dollar India at this point, given how much it's done. How worried are you that maybe this is the worst timing in terms of tactical timing? I understand that you believe the fundamental drivers are still there for later on in the year, but if we're about the start of a bear market risk rally, is this perhaps the worst timing? Are you worried by that?
I think from a timing perspective, I think that it is difficult right now. I think for me, the biggest challenge from a tactical perspective is we are in the summer months. Liquidity in markets tend to go down and you tend to see erratic market moves. There is that risk. At the same time, though, especially when it comes to risk-off trades, I think one can be a bit more specialized and focused. So for us, the EM is particularly vulnerable because we're in an environment now where G3 central banks, whether it's the Fed, the ECB, and other central banks, are starting to raise rates either more significantly than before or starting a rate hiking cycle. And that, in the end, will start to hurt EM markets as well. And I think in general, what we're seeing on the EM side is that there's still some concern about China, of course, and we're also seeing that there's a penalty given to central banks who are behind the curve. So I think opportunistically, I think there are some tactical risk-off trades one can do, and EM, I think, is a ripe area for that.
Interesting, because I think a lot of our commentators recently have kind of said, look, the few places where they like buying longer term is emerging markets because they're a little bit ahead in the rate hike cycle, they're a little bit more discounted. So I like the fact that you seem a bit unconsensus there. I guess and related to that, how much further does the big dollar have to rally?
Well, I think there is scope for it to rally further. The big question, I think, on the big dollar is what are US central banks likely to do. So, is the ECB going to raise by 50? Is the Bank of England going to raise by 50 as well? Are they all at the beginning of a multi-month rate hiking cycle, or are they going to be more cautious? If they're going to be more cautious, then the big dollar has much further to rally. On top of that, we also have to have a sense of what happens to the energy situation in Europe, what happens to Chinese growth. If all of those turn more sour, then the dollar can also rally further. So so in terms of the dollar rally, there is scope for it to rally further, but there are some things on the horizon which could cause it to hold back.
Bilal, are you expecting 50 basis points from the ECB tomorrow?
It's hard to say. I mean, our base case right now is for a 25 hike tomorrow with a 50 at the meeting afterwards. But of course, from a fundamental perspective, there's a significant amount of justification for them to go 50 tomorrow. So I wouldn't be surprised if we did go 50, but our base case is 25 for now.
All right, Bilal, great to have you on the program this morning. Bilal Hafeez, CEO and Head of Research at Macro Hive.